Good morning, traders. Captain Jim James here. Happy Saturday. I hope all is well this morning, that you were all able to go out last night, have some fun with family or friends, or even by yourself. Big shout out to at Quinn Invests and the whole Becky Quick thing. That was really rad. But anyways, we're going to take it easy this morning. I want to make this video for you heading into Sunday and Monday. Now, some technical, not technical, but some data points are unknown as of yet. But we're going to talk about where we are in the market so that you have a better understanding of what to look for as we head into Sunday futures and into Monday. If you're like a pro trader or something, you should probably exit this video because I'm not going to explain technically why we're here right now. I'm going to try to give a simple explanation. I always notice that in books and in posts on Twitter and sometimes in videos, it can be or tying together complex thoughts into a simple explanation to, like, Joe on the street or whatever, or Jim Bob or whatever, and it is difficult sometimes to convey. When I first learned how to trade spreads, I conceptually understood the thought process behind it, but I couldn't take myself to the next step of executing those trades. And I talked to another guy yesterday about that. Is like I needed that next bridge to get to the next part. So I think that's the focus of this morning's video, is just some basic things for people to understand. And what it does is, if you start to understand these concepts on their basic level, it gives you a better feel as to where we are in the market. And I get asked that oftentimes, and oftentimes I only post very basic information on Twitter. A lot of my videos are very basic in their information, and I sometimes even get shit for it. Like, people will say, why are you drawing charts, or why are you doing crayon gang stuff? And they seem to think that my background is only in snapping some support and resistance lines or whatever, when that's farthest from the truth. But there's not a lot of time to convey information. Sometimes simplifying information is better to get a point across to people than some of the shit that I read. I mean, some of the shit that I read and watch, by the end, I still don't understand what the thesis is, even though I understand what they're talking about. So I think that's what people are sometimes looking for. When I'm out there and I do my own due diligence, I teach myself. But sometimes I'm just looking for some guy or some woman out on Twitter to bounce something off of, or to hear their viewpoint. Like, if, some guy has been trading for 20 years and he says we're going up, I like to hear that sometimes too. It's nice to have someone else, especially in retail, just say it plain and simple. Right? It doesn't always have to be some kind of fucking, I don't know, like archaic thing that I have to go back and decipher, even if I understand what he's talking about. So I don't know if you get my point or not. So anyways, and then I want to talk about one other thing, and this is the bull bear case and stuff like that. We are going down, but even though we're going down, you have to understand, like, the runs that the bulls are going on are just as insane. Like, you're talking 100, 110, 150 point runs. Some weeks we don't even move that many points. This is in days. It's insane, the moves that are being made right now. So I don't think it matters which side, especially in this downturn, I don't think it matters which side you're trading right now. I know that you're making way more money on the short side, but dude, there's so much money in the market, coming out of the market right now. It's wild. It is absolutely wild. So we're going to talk about a few things. So we're going to go into, I'm going to take you back here on this larger view, on this larger picture later, but I want to take you quickly to the close yesterday. And I got spooked yesterday. I bought this second bounce yesterday, and I didn't buy the first one. And the reason I didn't buy the first one was because there was there are websites you can go to that shows you where the buyers are. Okay, so you'll see where heavy concentration of big money is, where they want to buy into the market. And one of those websites yesterday showed that there were buyers down at 4470. That's possible they could have came up to 4480. And the first buy was at 4489, I believe. But that buy yesterday was not that money that was sitting lower. And I posted on Twitter, that's a fake rip. And the reason that I posted that was because that wasn't that money from down below. That was shorts covering end of day. And I want to get a little bit closer and explain. And people asked me about that yesterday too. And I want to explain it better to you exactly what took place. So you had shorts come into the market down here, okay? Towards the end of the day, they were like right in this area. And we sat here from 1:30 until 3 o'clock, I think, right? And so when we were down here, these shorts were expecting for a much bigger dip, no less than 44.70 probably. When that didn't happen, they had to cover their shorts into the close, okay? And so they became buyers. So they covered their shorts, we rode up into the close. Now, while this was happening yesterday, those buyers from down below, that smart money from down below, did not swoop up like a shark or a whale and start buying. That was the first clue yesterday. The second thing that happened is when we came down to this 4,500, this is hard support, by the way. This is, whether you know it or not, hard support as of right now. But when we came down here yesterday, a couple things were happening in the background. There are hedge funds out there that are long a bunch of speculative shit. That's all that they're long on. And they started to get margin called yesterday. That's what happened. And while they were getting margin called yesterday, these shorts here all pre-knew this was going to happen, okay? And so these hedge funds started to buy protection at the lowest point, the lowest point in the market yesterday. They wound up buying put protection farther out and deeper than where we are right now. And that does a few things to the market, okay? It allows us to go deeper than 4,500 4,500 if supply runs out, right? And it drops our negative to positive volatility gamma. What that basic term just means is that whenever we come up to a certain level here, there will be volatility. There will be sellers, right? And that level is coming down farther and farther over time. Well, it went yesterday down to 457 from 460. So we dropped from 460 to 457 into close yesterday. Okay? You've got margin calls on hedge funds. And then you have put protection being taken out at a horrible time. And then to cover those margin calls, you saw after the close crypto dump. And you saw VIX over 30. When the VIX gets over 30, I posted about this part too on Thursday. When you start to see certain mechanics kick, or when you start to see certain metrics be made, it kicks in moves by institutions that they have to follow, protocols, right, that they have to follow. And so you saw this de-risking yesterday or overnight in the crypto market. So what does all this mean, right? Well, it's a scary situation, believe it or not. So what you're having now is this. Let's say you had 4,500 as the bottom down here, right? The absolute bottom. And then up here, or you had some volatility triggers below too, right? And above. But the problem is that we are compressing to a resolution at this point. The top is getting lower and lower and lower, and the bottom is not moving. And so when that top keeps getting lower and lower and lower, and the bottom hasn't moved, right? It starts to create a bottleneck while we have a very high VIX number. And so what does that mean? Well, it means it means some sort of squeeze. And it could end very ugly, or it could end to all-time highs, like ridiculous all-time highs. You're talking about going from 4,500 to 478, matter of days. That's how crazy it is. Okay? That's how crazy the moment we're in right now is. So anyways, that's why I didn't take a long into this close on Friday, was because of the mechanics that are moving right now in the market are literally, you're looking for certain things to happen. Now, we talk about, if you take a long, right, that you're going to let and I want some of you to really hear this because I don't think you're all listening to my videos. When you're coming up to one of these resistance points up here, right, you want a bank to take it over for you to then get long. The same holds true for our support levels. So if you're a bear and let's say you're taking this short, you're not going to hold puts or shorts into past this point, okay, unless someone takes you there. So you have to remove them or wait until we jump below and then pick them up back up again. That same thing works for the tops and the bottoms when we're in this situation. Now, so if you're a bear on Friday, my recommendation would have been you wait. You take your puts off, you take your shorts off. The mechanics of what took place here is high risk for a bull. And I want to explain next why. Because we still are not at 4,600. Our trigger was lowered yesterday. And with the weekend being a low liquidity environment, that ceiling has come down to 45.7. So if we rip into close, and then let's say Sunday futures, we rip and we tag 457 in Sunday futures, it could trigger one of those sell-offs like we had in the past in this environment. Because it's not, let's say we're at 456 in the overnight, and you're thinking to yourself, in Sunday futures, and you're thinking to yourself, everything is fine. Well, because we have till 460, right? You actually don't. You only have until 457 before that volatility kicks in. And so the question then becomes, how many sellers are up there versus how many buyers? Did the buyers step up in the Sunday overnight to fill or to consume those sellers? So the neckline here, or the neck, is being choked as volatility increases and as we get closer to the buy side. Now, this is what I think is going to happen. I think the best chance of what's going to happen is you're going to see volatility still in the coming days. You're going to see really fast movements up and down. I think the range of those movements are going to be very small, and the resolution will either be crazy high or crazy low. Okay, I think more on the upside, but there is a lot of stuff right now saying that it is to the downside. If those buyers are worn out, it will trigger a move lower. Now, how does this also? What's another way that this gets resolved? Is that those buyers from 4,500 step up, and you start to see market participants betting longer than just one day on calls or puts. If you start to see calls being bought that are dated for late December, early January, March, you will start to see the market increase. You also want to see puts not being bought at the levels that we're at, okay? And not for one day. We had again on Friday, we had that same situation that took place last Wednesday. So I'm scared heading into Monday. I'm going to be honest with you. I'm not normally scared of where we're going. I'm not scared, but I'm not normally concerned about where we are in the markets, and there is high risk heading into Monday. And to prove that point was what happened with crypto last night. So you can't say that it's not there into this weekend. Now, all I hear is parrots out there saying that the S&P 500 is now mimicking Bitcoin, and it has somewhat started to trade along with the S&P 500. Not completely, and it's not exact anymore yet. It's closer than it was a year ago, which is insane that it only took a year for it to trade closer to the S&P 500. But that was not a good look. No matter how you look at it, that was not a good look heading into Monday morning. You can rationalize whatever the fuck you want in your head, but it's not a good look. Now, we have some other things we have to talk about here, okay? I really want to talk to the people that are wondering about when they can reinvest in the market and when they can take along and not worry about it, having to watch the market constantly. You are looking for, we're in a negative gamma environment right now. So we have high volatility. That's what is to be expected. We're expected to have high range movements. Even though we're in this bottleneck, you're then going to see this really jagged movement. You really want to see us flip to a positive gamma. And when we flip to that positive gamma, what happens is the moves become smaller. And you'd be surprised. When we're in that positive gamma, you will tend to see an upward movement to the stock market and less damage done to the calls that you're owning and the stock, the underlying, or shares that you own in the underlying. And so if you wanted to take a long, so I'm going to do this quick line. This isn't even exact, but what you need to know between now and here, I'll do this one here. I'm going to do this. What you really need to know right now is that we not only do we need to be above 4570, but we now need to break above 4600, like this zone right here. We need to break above it and rest on it and start moving. This moment up here is when you can actually take a long and not worry about it any longer. And these lines are going to move every day as we move down because once these buyers step in, we're going to break above this and push. Now, when you break above this area here, you throw the boat at it. You just go the kitchen sink. And once you start getting some confirmation, they're making higher highs, higher lows, all those long-time things that traders tell you that are rules, okay? Now, so that's for you as the long-term investor or long-term bull. You can't take longs right now that are like investing. But you shouldn't miss out on where we are either right now because people are getting filthy rich right now. There is stupid money being made on both the long and short sides right now. Like stupid, ridiculous money being made. And I've showed you in previous charts where the support or where these zones are above and below. You just take the middle of it. If you just take the middle of this stuff on long and short, you're going to be fine. Okay? And this stuff's been pretty predictable. If you can't trade this environment right now on a daily basis, I don't know what else to say to you. This is the easiest trading environment that I have seen in a long time. Now, let's go on a farther out basis over here, okay? I want to take you back to the thought process here. I want you guys to go out there. I know that everybody's saying we're having a wick off event or a wick off or a jack off event right now. If that's the case, we're heading down here. We're heading down to this 4,200 level. That is where we're heading, whether you know it or not. If it meets the standards of a wick off event. So I don't know what to say to you on that. The concern here is that we break this 4,500. If we do, this was defended on Friday, and it was defended here on the 1st as well. It's been defended now 2 or 3 times, I think. I want to look at it now. It's been defended 3 times. And this is the key. What I posted on Friday was a stick save for the bulls was that we defended again. And not only did we defend on Friday, but we rose much higher. Okay, we had a nice high close, and this is a positive for the bulls. But that what happened with this crypto on Saturday is not good. There are underlying mechanics that are still saying that we're still in a risk-off situation. That's all I've got for you this morning. So that's what you have to take from this. You have to what it means is this: is that you know where our bottom is right now. It's 4,500, right? You know right now that 4,570 is now where we encounter volatility. You know you can take longs down below here. As long as it starts to turn back up, right? You're waiting for that signal. And the same goes for the top. You're going to see a bounce and then come back down. You know that we're going to resolve this situation heading into, I would say, December 17th would be the day. I know you guys are all wanting a holiday rally. You might get it in this resolution. But I'll tell you what, if we keep bouncing down in this 4,500 and grinding down here, and the market is absorbing these buyers, or if these buyers disappear because they know that hedge funds are de-risking their portfolios right now, it is certainly easy to see a rug pull down here and we start heading much lower. So the market is becoming riskier and riskier and riskier. The same it still somewhat applies to the bears as well, that they could get trapped themselves. If those buyers step up here, if there's a meeting right now going on at the Fed that we don't know about, where they're going to do a relief above, but these moves here are starting to concern me. And the action in here is most concerning. This action here is not normal.
We interrupt this program to bring you...
Okay, so I had to cut off there for just a minute. I don't know exactly where I let off. But the point is this. You're going to find resolution in here. This is a big wall right here. This is a lot of support. If we grind through this wall, the look up below is massive. And that is where the protection is coming on. That's where it was coming on to close on Friday, was that the risk profile of us going down has increased dramatically. Now, people were talking about puts dying on Friday. There's some puts dying on Monday. I watched puts come in on Friday to cover Monday and to cover the rest of early next week. That puts me on edge. Puts me on edge for a sideways movement. Even if we go up, to still bounce here and to maybe churn here for the rest of next week, unless more bears step in. Okay, I don't think that the sell-off in crypto yesterday was a good look for this resolution coming into next Monday. Okay, and I'm a bull. I am straight bull. So I don't know what to say to you at this point. I play what comes in front of me, and I'll take this ride straight up. I won't get fearful if we run up here. It's the moment we break through this 45.70. I'll take this long to 45.70 as long as I'm not in the after hours environment. If we're way up here, like being way up here into after hours was a no-go for me. Too close to the sun. So if we come up here and we break above at the opening bell on Monday, sure, I'll take that long right here, right? But if we come up here and bounce off and start selling down into the open tomorrow, I'm not going to take another long until we get down below over here. Okay, so Sunday futures is going to be very important for where we are on Monday. You're going to start playing this zone in here come Monday, right? And no matter what futures tells you coming into Monday morning, you're looking for these two areas down here. You're looking for 4,500 and you're looking for 45.70. And you bulls, as of Monday, you're looking to go long. If you're an investor type bull, you want to see us come above 45.70 and hold it. And stop looking at these peaks up here. These peaks mean nothing right now. Okay? You're looking for 45.70. Trust me. You need to break above 45.70, and then you need to rest above 4,600. Okay? I will see you all on Sunday or Monday. I've got a bunch of stuff I got to do this weekend. Do me a favor, too. I know that you guys hate liking and subscribing to people, but I don't know. I don't charge, dude. So if all I'm asking for you is a like, please like these videos. I mean, it's not hard, right? It helps me to keep making videos. So when I see that stuff, when I see people say, hey, thanks for taking the time to make a video, it makes me want to make more videos. When I see people liking these videos, it makes me want to make more videos. I don't understand. I hope you guys all understand that out there. And I'm working on getting you guys all plugged into the private handle. If anyone wants to know, I don't charge for that. That's free. I don't charge for anything. You need to remember out there, if you're listening to this video still, you need to remember out there that I might not like you, you might not like me. We are retail. And, we're not the biggest part of the market yet, but someday we will be the biggest part of the market. And we need to, at some point, be a force in the market. And until bulls, bears, theta gang all work together to try to discuss and rationalize information as to where the market is actually going at certain key points, then Wall Street doesn't give a flying fuck about us. The moment that there's some form of resolve to how we trade as a group, whether it's we're trading the market down or we're trading the market up, then we don't have a say in where the market moves. If we're ever able to do that, though, and as more Joe Bobs from Milwaukee come into the market to make their retirements, if that was ever able to happen, we would be a force to reckon with. Literally, we could be as strong or as powerful as an MS, believe it or not, or a JPM. I don't know if you guys all understand that, but I'm sure that there are companies or people working towards making that information key or available at some point. I mean, shit's going to get wild over time, but my point behind that is rather than just being a total fucking troll, try to talk to your fellow man out there. Like, we're all trying to make money out there, okay? And you're not actually taking money yet from your fellow or your opponent's bull or bear. You're taking money from the banks, from Wall Street. Think of it from that perspective. And no, you are not, and I am not, moving markets. I'm not moving this market by talking about SPY. You're not moving the market by fucking pumping Bitcoin or Dogecoin or Doge. You're just not. You think you are, but you're not. Okay? Sorry. Anyways, have a great weekend. I'll catch you on Sunday.